Could this be the black swan event that nobody is talking about in Canada that could end up costing hundreds of billions of dollars, if not trillions of dollars? Let's take a look and see what's going on. And of course, the Ontario Teachers Pension Plan is involved in this one. So we are talking about Canada Guarantee. So in case you didn't know, this is a mortgage insurer, and they are essentially insuring subprime mortgages. So the lowest quality mortgages, they are insuring them. And I mean, I know I'm kind of laughing, but it's just because this housing market and everything that's happening is so stupid. It's just, you have to laugh sometimes. But anyway, this company, Canada Guarantee, is partly owned by the Ontario Teachers Pension Plan. And we don't know what the liability is behind all these mortgages that they insure, but it could be absolutely colossal. And the thing is, let's take a look at some of their products. So for one of the first products they offer is a Flex 95 Advantage program, which offers a flexible down payment option for borrowers with a strong credit history. The borrower may access 5% of equity from sources not covered in our down payment advantage program. So basically what this is a flexible down payment program where you can borrow the down payment. Yeah, I know, unbelievable. And then another insurance product that they offer is targeted at immigrants. Now this is the big one. This is the really big one that I think could have a massive impact. As we know, Canada is in an immigration bubble. There are a lot of immigrants that come from the Philippines, China, and India. These places are not places where a lot of rich people are arriving from those countries, like the mainstream media is telling you. And a lot of them are relying on products like this in order to get into the housing market, and they don't really understand the housing market in Canada, and they're just told, and they believe what they're told by realtors and mortgage brokers, that homes only go up in Canada. And this program is literally targeted at them. So Canada's Guarantees Maple Leaf Advantage program provides new immigrants who have limited documented credit history, the opportunity to purchase a home with as little as 5% down. Yeah, you heard right here that they are literally insuring subprime immigrants, people who are new to the country, limited credit history. I mean, it's just baffling, isn't it, really? When you're talking about the high amounts of money as well, you're talking about average home price over $700,000 across Canada. It's kind of baffling when you really think about how big a problem this could actually be. And then we're going to flip over to another one of their products, which is the Lifestyle Advantage. Canada Guarantee recognizes that borrowers may require a second home for a variety of reasons. The Lifestyle Advantage program enables borrowers with a strong credit history to own a second home with as little as 5% down. So again, they're allowing people to buy a second home for an investment property, something like that, only put 5% down, not have any skin in the game. I'm just going to remind you that this is owned by the Ontario Teachers Pension Plan. So, and obviously they're collecting premiums. Everything's great for the pension fund whilst the housing market is in good shape and whilst people aren't defaulting and losing homes and everything like that. But as soon as that shifts, it turns into an absolute disaster, which will happen, and we will see that come. And then another one that they have is the Low Doc Advantage program. So this is for borrowers who are self-employed. I mean, this is another risky kind of subprime borrower, and it says, okay, we're only accepting people with strong credit history, but as we know, credit scores, I mean, they're easily manipulated, and you can actually have zero debt and have a worse credit score than somebody with a lot of debt, because it's all based on how you're repaying and everything like that. And it's just a broken system. The credit scoring system is just totally broken. And we saw that in 2008, because when you saw that NBER report that was put out, like a lot of the people who were defaulting and being foreclosed on were in fact prime borrowers with good credit. So what does that tell you about the credit system, and in terms of credit scoring, how broken the system really is? So that's just another thing. And then when we start to think about the size of a bailout or a bail-in or what could possibly go wrong, you have to look at household debt to disposable income, and you have to look at household debt to GDP. So household debt to disposable income is at 182%. 182% more than income. I mean, need I say any more? It just kind of shows you where we're at. And then the private debt to GDP is one of the highest in the world in Canada, believe it or not. I think it's 5th place in the entire world for the highest private debt to GDP. This is private debt held by corporations. So corporations are heavily indebted. We're in a high interest rate environment compared to the past 20 years. And as you can see from this chart, debt has just ramped up ever since around 2006, 2007, created this huge bubble. It's almost it was at the peak or above 300% of GDP. It actually went slightly higher than the US private sector debt to GDP did in 2008. And the thing is, this is quite important because when you talk about people becoming unemployed, you have to realize that the rising interest rates that we've seen over the past couple of years, they are really going to have an effect on corporate balance sheets to a point that they're going to have to start laying people off. Now, debt rolls over at different times. There's almost $1 trillion worth of debt that's going to roll over this year. So when that rolls over and they have to finance at a higher interest rate, they're going to have to cut costs in other ways by laying people off. And this is why it has a lagging effect, because when the Bank of Canada raises interest rates, it doesn't have a immediate impact if, let's say, a corporation is financing their debt mostly on like a 1 year or a 2 year bond. So it's very, very important, because when those bonds come up and they need to issue more new bonds, they're going to be issuing them at really high interest rates. And if they're not going to put out those bonds, if they're not going to borrow more, then what are they going to do? They're going to have to cut costs still. So absolute disaster. And really, this, people don't talk about this much, but this is kind of the elephant in the room that nobody talks about. And then also we know that household debt to GDP is just absolutely insane as well. So household debt to GDP is coming down. It's peaked. But it's all like, we're just talking about household debt, and it's over 100% of GDP. So when you're talking about how much a bailout could possibly be, or whether a bail-in might be used, it is entirely possible, because if you have one of these companies like an insurance company like Canada Guarantee that, let's say, has like $500 billion worth of MBS, that to bail that out is just going to be incredibly difficult without using like a bail-in. And where does that money lead to within the banking sector and everything like that? That's when you really start to get into the weeds of how far this thing has actually spread. So a lot of people don't even know that there is this thing called Canada Guarantee and that it's owned by the Ontario Teachers Pension Plan. But it says right there, they took it over in 2010 off AIG, which was a failing mortgage insurance company. So, I mean, it's just kind of crazy what we're going to see happen. I think it's going to be mad, and this blow up is going to be absolutely insane. And you could definitely see black swan events surrounding companies like Canada Guarantee, because they have a massive amount of exposure to the housing market via this mortgage insurance. Literally, their mortgage insurance is what pays out when people default, and we're going to be entering a time where more and more people are going to default. We see the headlines all the time. People are refusing to acknowledge it. They're in denial about what's going on. But we are going to see defaults explode at some stage during this bust. So you have to be ready for it, and they're going to be holding rates high for the rest of the year, it looks like. And By the time the government and the Bank of Canada realize, it'll already be too late by then. They are always behind the curve, as we know. So anyway, if you've enjoyed this video, you might like that video there. You might also like that video there. I will see you in the next one. Sorry, I look a bit rough, not feeling the greatest today. So